And it is Monday, so you know what that means. It is Money Monday, and today we're talking about changes to the employee retention tax credit. That credit was given to small businesses during the pandemic. A provision in the so-called One Big Beautiful Bill passed over the summer extends that statute of limitations by 3 years now. So Paul Hood with Hood CPAs joins us this afternoon to tell us what that means for small business owners. And I know you were pretty excited to talk about this.
Yeah, so it's a good thing and it's a bad thing. So statute of limitations is in there to protect taxpayers as well as the IRS. So statute of limitations, if you file your return by, say, October 15th that just passed, the IRS only has 3 years to audit your return. Unless there's fraud, then they can go beyond that, but 3 normal years. So it keeps them from having an open book to really do everything. But also, same thing, you have 3 years to change that return or else the IRS doesn't have to do anything about it. Well, when the process of the Big Beautiful Bill was going on, a lot of people filed for the employee retention credit because of COVID for 20 or 21. And once you file that, then the IRS has 3 years to audit to check on it. Well, they have, I don't know, some just incredible number, 500,000 applications that they haven't even been able to act on, to review, to pay out. So they lobbied Congress and says, hey, for the benefit of the taxpayer, to give us time to give them their money, we need to extend it from 3 years to 6 years, which is a great thing. The problem is the IRS has started using that 6-year statute extension to go back on ones they've already filed, they've already paid. So it is a horrible, in my opinion, abuse of what was the intent. So the good news is if you filed your employee retention, they haven't paid it, the 3 years is now 6 years. So it's a better chance you'll get that money back.
Right.
The bad news is, though, if you filed yours and they've already paid it, they reviewed it and they paid it, they have 3 more years to come back and say, well, we changed our mind.
So if you thought it was closed, said and done, now it's
not.
Okay.
Yeah.
So that was my next question. What happens to businesses that have already passed that 3-year limitation? So that potentially opens them up to be looked at once again.
Yeah, and it just so happens that they passed it within 2 months of most people's statute running out. Well, now they have a full 3 years to go back and say, well, we don't quite agree with it. And it's not really fair. I think there's a movement in Congress to change that because there's going to be some massive lawsuits, tax court, probably Supreme Court cases, because how do you change a deal after it's already been done?
Right. So good on one hand if you didn't make the cut, bad on the other.
That's right.
All right. Thank you, Paul. Thank you for being here for Money Monday. Stick around. We'll be right back.